everyone. Sorry about the delayed start there. Just some technical difficulties on our side. Apologies there. My name is Evan Heppy. I'm an industry marketing manager here at Tipalti, and I'm excited to welcome you to today's webinar, CFO Perspectives, How E-Commerce CFOs Scale Financial Operations. Today, before we jump in, I just wanted to go over a couple of housekeeping items and let you know a little bit more about the platform here. So the platform mutes all of our participants when you join the live webcast. There's no dial-in information. All the audio is through your computer only. We encourage you to submit questions via the Q&A widget at the bottom of your screen. As you may notice, there are a few widgets at the bottom there that you can click on and use as you see fit. And the Q&A widget is one we encourage you to use to submit questions for our moderator or our panelists or myself on today's webcast. There's also a resource center that you can use for additional content, and you can customize the console with any of those widgets there at the bottom to make the experience your own. So without further ado, I would like to introduce our moderator for today's conversation, Jack McCullough. He is the CEO and president of the CFO Leadership Council, and we are delighted to have him on today's conversation. Jack, off to you.
Well, thank you very much, Evan, and thank you to everyone at Tipalti for organizing this panel. I am the president of the CFO Leadership Council, and our group has about 2,000 members, primarily CFOs across North America. And the biggest concern that my members have for 2021 is, in fact, scaling operations through digital technology. And when you think about it, where else can a CFO increase revenue, reduce expenses, and improve collaboration? Probably nowhere. So I really think this program is particularly timely for financial leaders. And before I introduce our speakers, I would like to do a poll, which will just help us get a little bit of a feel for the audience. And for those who can't see it, the poll question is, which of the following is your finance department's top priority for improvement this year? And the options are automation, data analysis, scalability, or driving revenue growth. And I'm going to be silent for about 30 seconds while you folks think about your answer and respond. Okay, I suspect you all have had a chance to respond, and I thank you for that. And no surprise at all, the number one answer by far is automation with 47%. And then number two was driving revenue growth at 35%. So that's fantastic. These are certainly the two areas where CFOs and their teams should be focusing their energy. So a little bit of applause to our audience for these responses. And now we're going to get into some CFO perspectives. And we have two great talents that I want to introduce you to briefly. First of all is Jonathan Wu. He is with Invisible Commerce, and you can read his bio there. And Jonathan will be joined by George Lawton, who is with the Answer Company and Lykki.com. And I'm going to actually allow them to introduce themselves rather than me doing it. Jonathan, can you share with the audience a little background on yourself as well as Invisible Commerce and you know what your overall experience has been with e-commerce companies?
Yeah, of course. So just to give a quick sense on Invisible Commerce first, the company is essentially a retail as a service infrastructure with the idea to allow any brand to monetize an audience leveraging commerce. It's basically commerce in a box, taking everything from technology, inventory, logistics, customer service, taxes, accounting, and building it as a complete service for anyone. And then before that, I started an e-commerce company called Touch Modern and scaled it up to about 100 million in sales, now larger in a few years. I had three amazing partners that really focused on the revenue growth side of the piece. So I pretty much focused entirely on scaling our operations. We had a bit of a unique model in the sense that we were more of a daily sales model. So we were onboarding about 10 new vendors per day and working with 4,000 vendors per year. So just, got a lot of perspective on the chaos of really scaling up operations from that perspective.
I see. That's great. So cool. So, I know the audience would like to learn a little about the Answer Company and Lykki.com. So, George, can you share a little about your background and your companies as well?
Absolutely. So, I'm what they term a fractional CFO. I am the CFO of a few companies, including the Answer Company and Lykki.com. The Answer Company has been around since 1994, and it helps organizations to answer questions around technology and then works with them, propelling them forward while leveraging the technology. Lykki.com, that's been around a little bit longer, and it is the single source of everyday supplies for the office. It is has an e-commerce platform. Users can log in and order anything from furniture, desks and chairs, down to snacks and coffee and water and paper. So pretty much everything you would need in an office. And the beauty of Lykki.com is you will order it on a Monday and it will arrive on Tuesday morning, pretty much around the same time the invoice arrives, which is then you have to pay by credit card. So an exciting place to work. And Lykki is a Danish word for happiness.
Oh, how about that? So that's a great little bit of information to know. So cool. Well, you're working, I know you said you're a fractional CFO. So how many companies do you work with at a time typically, George?
I have about between 5 and 7 on an ongoing regular basis, but I also provide one-time consulting services as well to other companies.
I see. Cool. Well, I did that for a few years, so I think it's a wonderful way to make a living. So I guess we will direct the first question towards Jonathan. And so, Jonathan, if you would tell us a little about the role of the finance team in helping Touch of Modern to scale to the size that you are today. And maybe you can give a little bit of background on how big that is.
Mm-hmm. Yeah, so Touch of Modern was very heavily driven from finance in the sense that our growth was very methodical. I love commerce because if you can figure out the formula for it, it just kind of works. And we were able to crack it in 2 weeks and kind of grew based on our entire financial model over the 4 years I was there. So on the finance side, we focused on essentially allocating resources to maximize our growth rate and really focused on keeping our operations side lean. I ran finance myself for the first 3 years, mainly because I didn't really trust anyone to do it, but also I just thought of it as overhead. So I worked with our CTO to pretty much automate our entire finance department. So we didn't really need to have anyone else other than myself. And a key part of that was essentially with our automation, we essentially had almost near real-time financial data, which meant we could dynamically forecast and budget every day, every month, because we had such information. And that was pretty critical for us when we were growing because every month was pretty different as we were evolving.
Yeah, you were certainly ahead of your time, it sounds like. So.
Yeah, I like to rethink operations and finance completely from scratch and kind of ignore what's been done today. And, essentially you can do really interesting things if you're not burdened by trying to follow what are thought of as best practices.
Okay, interesting approach. So don't tell our friends from large consulting firms that, though. So.
Well, I come from a consulting firm, so
yeah, I appreciate that. So, but no, that's a great approach. You're absolutely on the money there, I believe. So cool. And I'd like to turn it to George. So tell us a little about how finance helps fuel growth at your clients.
That's a really good question. I mean, in terms of the Lykki.com situation, we've completely integrated the e-commerce platform with their Sage ERP system. So, from the time the customer orders their product, the integration and Sage manages the entire fulfillment process, and then ultimately the invoicing and the payment process. So from a from how finance helps fuel growth at Lykki, it really is around the automation, and it kind of ties into the whole digital transformation conversations that people are having today, really empowering the end user to drive the entire sales process, be involved, and the integration between the multiple systems that we have at Lykki allows the user to be constantly aware of what's going on in the sales process.
I see. Interesting. So, well, you both have some great stories to share. And we'll stick with you for the moment, George. So, and the world has changed dramatically with COVID-19. And how's it affected you and the team at both of your clients? And have there been any shifts in how you support the business things you're looking at? And I'm going to challenge you to try to answer this question without using the word pivot.
Thank goodness my notes do not. Yeah, no. I mean, it's been the interesting thing about certainly the Answer Company. We've been around for 25 years, and we adopted the remote work model right from the beginning. And so we've set up our processes, our systems, so that all of our team members can be remote, whether it's at working at home in their offices, working at one of our offices across Canada, or preferably at one of our client sites. But we did notice that as the pandemic hit and the implications of the pandemic were felt so rapidly, a lot of our customers were caught, I guess, they were caught off hand. And because we were able to maintain our operations at 100%, we were able to fully support them through their transition. Notice I didn't use the word pivot. Their transition to more of a remote workforce type situation. The tricky thing with Lykki.com, because we're providing supplies to offices, a lot of our customers felt that they didn't need us anymore. And so at Lykki, we have researched, investigated, and tried to move into different areas of our business that supports the remote workforce. And to that, Lykki was instrumental in providing all of the Answer Company employees with a little care package right before Christmas, which was delivered to everybody's door, and probably had the biggest morale boost for the staff in a very long time. So, we're transitioning, we're developing, we're evolving, and we're keeping up.
Yeah, well, it sounds like both companies are actually well positioned to help their customers during the pandemic, which is fantastic. So, great. So thanks. And then I'll read this out loud again for those who can only hear, but there was a recent Glossy article that claimed e-commerce sales in the U.S. grew 34.2% year over year compared to 15% the prior year. So that's obviously pretty rapid growth. What does it mean for the finance and operations teams at your organization? Are there any particular areas that FinOps professionals should be focusing on in 2021? And the question's directed at George, but you can chime in as well, I think.
Yeah, so from our perspective, interestingly enough, prior to the pandemic, we did see the start of a shift towards cloud-based ERP systems. We provide, our product portfolio contains 2 or 3 of those cloud ERP systems. So we've seen a natural shift of people away from on-premise systems to cloud-based ERP systems. I'm a firm believer in the cloud and using the cloud. So both at Lykki.com and at the Answer Company, we use cloud-based ERPs. At 2 or 3 of my other clients, we also use cloud-based ERPs. And that, it really did allow us to shift quite quickly and quite easily to the remote kind of workforce scenario that we all had to adjust to during the pandemic. And in addition, it does actually, in my opinion, and by my calculation, lower the cost of ownership. All of my clients now have almost military-grade security around their ERP systems, which they could never hope to afford if they had that on-premise.
That's interesting. Almost all your clients, huh? Wow. That's fascinating. Yep. Jonathan, anything to add here on this before we move to the next one?
No, I think the other common thing is, with e-commerce in particular, it's not the same as software where a revenue growth is just selling bits and bytes. E-commerce means you're dealing with a lot of heavy logistics and operations. So rapid growth typically means more chaos, or anything that's manual is scaling up manually. So I think an important thing to think about is essentially agility, and anything that has a manual touch or essentially a physical person doing something, it's time to rethink it, because to be able to handle growth like that, you need to be able to be a lot more flexible.
I see. That makes a whole lot of sense. Cool. We're going to stick with you a little bit. And I know you have Jonathan, sorry. I know you have a lot of experience with the investor community. So how do you think the investor community is responding to the surge in e-commerce? Obviously, it's a white-hot area. Do you think VCs and others are less likely to back DTC brands, direct-to-consumer? And what other trends might you have noticed?
Mm-hmm. Yeah, so Invisible Commerce is fresh off its fundraising from a few months ago. And so by default, as you mentioned, there's been a huge interest in everything commerce because of COVID. I think with the rise of Shopify, investors have become a little less interested in direct-to-consumer companies, because it's getting harder and harder to pick the winners, and there's less outside returns there to win. And overall, everyone has been a lot more interested in companies that enable e-commerce, everything from infrastructure to optimization and services. And there's a lot of new models being invented right now. So we'll kind of just see which ones have legs over the next few years.
Yeah, it's interesting because, a metaphor someone shared with me once is the California gold rush. The people that actually made a lot of money were the ones who sold the picks and the shovels.
Yes, exactly.
It sounds like you're seeing similar things, right? The modern day picks and shovels manufacturers are doing pretty well.
Well, yes. I mean, most people starting e-commerce or retail company are doing fine. But for the venture model to work, they're not looking for just, fine companies. They're looking for those 50, 100x return. And you only get that when you're selling those picks and shovels.
Makes sense. George, anything you want to add to this before we move on?
No, I think that covers it quite well.
Okay, fair enough. Yes, I agree. So you recently automated AP at Touch of Modern. And so what are some of the unique payables challenges that face e-commerce companies specifically, Jonathan?
Yeah, so, as my personality type, I'm pretty conscious of resources and I guess generally frugal, which I think probably a lot of people here are as well. And so I felt, especially in the early days of the company, I wanted to essentially control spending and have a good understanding of every dollar that went out. And so given accounts payable accounts for a huge portion of all of our outflow of dollars, I essentially went looking for technology where I could design it to handle all of our payments to all of our vendors based on a very complex set of criteria. And that's how I stumbled into a company called Tipalti. We had a unique challenge, and keep in mind this was 10 years ago, where we were onboarding vendors every day, but they were all around the world. And we were paying vendors every week because we were running daily sales that lasted a few days. And so most payments platforms that I ran into, especially in the US, didn't really understand the complexity of international payments. But I think it's important to think about in the very beginning of the company, because as we go into a more global society, you're doing business across borders, and people really prefer convenience, especially. And that was a very big thing with our vendors. They appreciated that we were very flexible in working across borders. And then, so I think that was probably a unique challenge that people should really keep in mind.
Well, yeah, that sounds like a marriage made in heaven with you and Tipalti, though. So, but interesting, cool. Okay, and then actually we're going to turn it back to George, but before I do, I just want to mention that, or remind the audience that there is Q&A down at the bottom, and we will answer all of your questions if we can at the end of our presentation, time allowing. And so if you hit the Q&A button and type it in, I am going to be monitoring that, and towards the end, I'll answer everything. But George, again, you're a CFO of multiple businesses. And so what are the major differences in managing AP at the Answer Company versus at I keep wanting to calling it Loki, like the Thor's brother from the Avengers movie, Lykki. Yeah. And, maybe some of the other clients too, because, there was one point in my career, AP's AP, but it's not really like that anymore. So I'd love to get an understanding of how things are different between two companies.
Okay, well, first I'm going to cover off the similarities. I mean, the bulk of the AP in both companies is actually driven from sales. And so, you've got this back-to-back types relationship between, getting orders from customers and then having to place orders for that product from the multiple vendors. So having the ability to do those back-to-back type orders is crucial to both companies. But similarly, the differences are that with the Answer Company, some of the AP is far more the AP that's not based on the selling function. It's unique. It's sometimes quite specific, and can lead to a lot of human touch, which is something that is, the more times somebody touches a transaction, the less scalable that particular process is. So that's one of the things that we're looking at within the Answer Company is how do we automate even those more unique type AP situations so that we don't have the multiple touches from human beings.
Okay, that's a fascinating contrast. So good. We're going to stick with you for a little bit. And, you touched on financial automation. And so, what are the steps that you and your team are taking to keep visibility into performance and financial operations at both of your clients?
Well, I'm a firm believer in dashboards and exceptions. So in both of the clients and in pretty much all of my clients, I tend to implement a variety of dashboards which monitor specific KPIs, and those dashboards are then published to a variety of people within the organization, both management and more clerical people. And the intent is for those people to be looking at those dashboards on a constant basis. At the Answer Company, for example, when I log into our ERP system, it presents me with my dashboard, and I can quickly take a look at the various KPIs across the dashboard and get a sense for the performance of the company. We're doing real-time data entry, real-time transactional processing, so that we constantly have up-to-date information on those dashboards. In addition to that, we are using what Sage called smart alerts. So whenever something happens within the system, within the process that is somewhat exceptional, somebody gets notified, whether it's through an email or an instant message chat. Somebody gets notified that there's an exception and can quickly get on it and deal with it. The same thing with Lykki.com. We do use dashboards. We use, triggered reports out of the system delivered to specific people and specific organizations, groups of people within that organization. And we have been working with products that can predict certain customer trends. We were using a product that looked at historical sales by customer, by SKU, and predicted what our potential sales could be in the next week, month, or 3 months, and then that would drive our ordering of product from our vendors. So that's kind of what we do at both those companies.
It's interesting, and you mentioned KPIs a few times. Just in case there's anyone in the audience that isn't familiar with that particular acronym, it is Key Performance Indicators. So, and I'm curious, like when you use KPIs, do you have like different KPIs at each company? I assume you probably do, but there's probably a lot of similarities as well, right?
Yeah, I mean, there are certain base similarities, certainly from a working capital perspective, that we have very similar KPIs within the working capital sections, but very different KPIs as we get to operations. You can imagine that at the Answer Company, we're because it's a very time hourly based business, we're looking at time management, we're looking at utilization rates, whereas at Lykki, we're looking at profitability by SKU, we're looking at profitability by customer, the cost to acquire a customer, those kind of metrics. And then, of course, I have one of my clients is effectively it's an R&D company, it's a development company. They're in the biomechanical sphere. And for them, it's about, how many patents have we generated this month, or, how many products have we developed, or how much is it going to cost us to further develop this particular product? So, yeah, different KPIs.
I see. That's interesting. And you never mentioned accounting. And do you use like traditional GAAP accounting much when you're talking to people, or is that just, rules-based systems tend to have limitations, right? Do you not rely on them as much as you would have a decade ago?
Yeah, I like to stay away from, I've been in accounting for 30 plus years. So I've come through the let's bamboozle them with what's the word, acronyms and all sorts of things like that seem to pop up in GAAP, generally accepted accounting practices. There's one. We've got to a point now where information is readily available, in our pockets with our cell phones, that you've got to start speaking in more relevant terms. And depending on the size of the company, if you start off with small companies and you're supporting entrepreneurs, they really only care about how much money do they have in the bank and how much longer do they have to spend it. Whereas, bigger organizations are less impacted by their cash balance because they have an ongoing revenue generation process, and they're more impacted in how can I make more money faster and keep my customers happy.
I see. Interesting. So you've been doing accounting for 30 years.
Yes.
Wow. So that's almost as long as Jonathan's been alive. I noticed he won a 30 under 30 not too many years ago. So, so not to make you feel old, because I'm older than you are, I believe. So,
yeah,
anyway,
I hope so.
Yeah, well, if you look at my picture, I certainly seem to be, right? Let's turn it back to young Jonathan. So, Jonathan, if you could share your view on when is the best time to evaluate fintech solutions for your business, and then, building on that, if you can tell us what sparked you and your team to investigate Tipalti.
Yeah, I mean, I have a slightly unique perspective given that I've started both of the companies. But, from that perspective, I love to do it at the very beginning. A main reason for that is I very much come from the set it and forget it mentality. So I love to set up all of my financial operations in the beginning correctly, and so I never have to think about it again. And I'm also a big stickler for extremely accurate financial data for decision making. So you really get that accuracy with automation and technology that you don't always get with the human touch. And, there are a couple of reasons what sparked us to look at Tipalti with my first company, Touch of Modern. The biggest one was, especially when, as I mentioned, we were dealing with foreign invoices or foreign currency, is that it's incredibly time consuming to send out a foreign payment because now you're dealing with currency. And then, of course, when you're processing large amounts of invoices daily, especially in the beginning of becoming, it's a big hassle, especially if you don't have any staff to help process it. And then the other unique thing we ran into, which I think is pretty common in e-commerce, is that when you're working with particularly small vendors, you never receive what you order. So you can't always actually pay your invoices because they're not always accurate. So we had to actually redo our entire model where, we issue POs, we receive invoices, but we kind of ignore both of those and actually leverage our warehouse in receiving products to figure out what we actually received, and then we issue our vendors payments from there. And as we kind of ramped up, we actually were able to change our inventory model entirely, and now we just essentially consign products with our vendors and pay them as we sell them. But because we designed essentially an automated payments method, we could make the switch on the business side without really affecting our broader operations. So we ramped up from a couple of thousand payments a year to now, I think, 22,000 payments per year, just to make it easier for our vendors and they actually enjoy working with us better. And our business was operating pretty much the same.
Okay, that's great. So that's a fascinating perspective. And now back over to George. So tell us a little bit about connecting your software systems to your ERP. And you use Intacct and NetSuite at these two companies?
We used to use NetSuite at one of them. We moved off NetSuite onto Intacct, and at Lykki we use one of the other Sage products. But yes, as I mentioned earlier on the call, the integration of the systems, in my mind, is probably one of the key things you want to do, just to make sure that you are able to drive growth through scalable processes on the back end. I think Jonathan just touched on it. If you don't have that scalability right from the beginning, and you don't have that automation right from the beginning, you're really starting off with your hand tied behind your back. And in terms of the connections between Intacct and other systems, with Intacct being a cloud-based system, we're finding that there are multiple solutions out there that you can connect through APIs to your ERP systems. And it allows you now to focus more on the best of breed systems. So for example, at the Answer Company, we have Intacct as the back-end ERP, and then we're using best of breed CRM package, a best of breed project management package, best of breed human resources package. So we're not focusing on one single vendor, but we are being able to leverage best of breed products and get the best out of our systems just through the ability to integrate them.
Makes a whole lot of sense. So cool. Okay, back over to you, Jonathan, if you can answer the same questions.
Mm-hmm. Yeah, so for Touch and Modern, we built our ERP in-house. And of course, since we were connecting it directly with our own software, everything was fairly seamless. But after a few years, we realized building your own ERP is a little more difficult than you would imagine. So now Touch and Modern actually is in the process of migrating to NetSuite, just to have more robust capabilities. And of course, NetSuite plays pretty well with every software system. And my CTO there is handling that transition.
I see. Interesting. Great. Okay. And so when you're evaluating automation tools for finance, what does your team know about all that? And are there any red flags or particular milestones that you should be aware of as you're scaling?
Yeah, as I mentioned earlier, it really is about human touch. Interestingly enough, I had a conversation with my team yesterday about the amount of time it takes us to invoice our customers. This was at the Answer Company, and we've started to break down the processes around billing and identify the bottlenecks and where there are too many areas of human touch. And once we break down the processes, we're going to step back and ask ourselves those difficult questions of, do we need to do it this way, or are there better ways of doing it? And I foresee that we will probably get at least a 50% uptick on efficiency through billing once we've gone through that process. We went through a process earlier this year of adopting a customer payment solution that was integrated with Intacct, and we have significantly reduced the amount of time that we used to spend on processing customer payments. And we have now empowered our customers to be able to monitor their outstanding invoices with us. They get to pick which ones they're paying. They get to pick when they're paying them. And literally, we don't have to do anything. All we have to do is send them the invoices, and they do the rest. They pay it. The system processes it through our ERP. We don't even touch it, which is saving us a significant amount of time on that end. Now, we just have that hard, arduous task of getting all of our customers to use that system. And, from an AP point of view, we want to do the same kind of thing. We want to empower our vendors to drive our AP process so that we don't have to drive it.
Okay, that's a beautiful model. So that makes sense. So cool. Back to Jonathan, and I'm interested, Jonathan, because you did have a homegrown system. But when you were developing your tech stack over at Touch of Modern, what were some of the biggest challenges you faced?
Yeah, so I had also the fortune that our CTO had a very operational mindset. So he and I looked at every aspect of it together. But I think a core philosophy for us was that essentially every time we were looking to hire someone or add someone to the team, we first made the conscious thought to see, is there a way we can use technology or engineering to either delay that hire or completely eliminate that need for the hire? And I think that exercise really helped make us more efficient because we were able to really seamlessly embed technology within all of our operational processes. And we essentially designed our processes to leverage software and technology to automate anything that might be repetitive or anything that essentially a machine could do, such that our team was really focused on just like the unique things that only a human can do, mainly communicating with our vendors, taking photography and fulfilling orders. And we use software for everything else to communicate with our vendors, collect information, pass information amongst teams, and communicate across teams of different responsibilities. And invisible commerce actually gets even more complicated because now building an operational stack not for one retailer, but essentially for an infinite numbers, it's a little chaotic. We're actually doing things a little manually right now because my CTO is building out some of the other parts of the stack, but we plan to automate essentially everything as well here.
I like how the way you phrase things, like a little chaotic. I'm sure it's more than a little bit chaotic, my friend. So cool.
Small team, but fun things.
Yeah, as I'm getting to know you, I think that you love a little bit of chaos here and there. So cool. But back over to George. So based upon your experience running finance, are there any recommendations you might give to growing e-commerce companies?
I'm actually going to leverage what Jonathan said. Do it early. Build the automation in early. Get the systems up and running early, because that's the only way you're going to be able to scale. I've seen many companies that have a great idea. They get out there. They don't spend a whole lot of money on their systems and their processes and their back end, and then they trip and fall as they're growing, and that is definitely not where you want to be. So my advice to any growing e-commerce company is do it early and do it fast.
Okay, that's certainly great advice, right? A little proactivity. So cool. And so I'd love to learn, Jonathan, always major lessons you've learned. You've now had the opportunity to grow several businesses over the past decade. And, in particular, any lessons about tackling financial automation?
I think the big one in general is when you tackle a problem, obviously tackle one at a time, but really make sure you solve it so that you never have to think about it again. I think the most annoying thing is putting in a patch that kind of works for a year or two, but you have to revisit that problem later. Like a great example right now is we know from Invisible Commerce that if the business is going to work, it's going to get complex very quickly. So even as a company operating for 2 months, we've already engaged with NetSuite, and we're looking to go have a full ERP from the beginning, just to have all of that data in-house and like be able to capture all those processes very quickly. And I'd really definitely emphasize having as close to real-time financial data as possible. In the past, it was this general conception, especially from accounting, that they would close the books, call it like 2 weeks after the month's close. But if you essentially always had real-time financial information, it really helps with your decision-making and just being more agile with your strategy as the business is evolving.
Okay. I believe that is absolutely some great advice. So, George, I'm sure the audience would love to know what automation tools you're working with, both at the Answer Company and Lykki, and what are some of the next areas you're planning to address and improve?
Okay, so I mentioned the payment platform that we're using at the Answer Company. It's called 2CP. That's the payment platform, and the next thing that we want to look at is AP automation. I have looked at a couple of different AP automation systems with other clients that I have, and those work well with those clients, but they wouldn't work well at the Answer Company, nor would they work well at Lykki. So I'm definitely open to looking at something there. In terms of the next areas to address and improve,
You're so close to perfection that there are no areas.
I really wish. As I mentioned, from the Answer Company point of view, we're definitely looking to improve our billing processes and how those happen. And then, to be honest, Lykki is pretty much close to perfection in terms of automation. I think, if we could get an AP automation system in there that also handles the payments, like Jonathan was mentioning earlier, to the multiple vendors and get them out, that would be probably a good area to focus on. Obviously, with the pandemic and our pivot to alternative product deliveries, we've got our hands full a little bit right now, but if we do return to people being back at the office and our traditional model getting back up to speed again, that's definitely an area we will address.
Okay, interesting. It's always fun and challenging. So, and I guess a similar question back over to you, Jonathan, but after, when you're finished with automating payables, what's next on the agenda?
As I mentioned, if you essentially automate something that seems unscalable, it allowed us to essentially rethink our model for e-commerce. And so, as I mentioned earlier, we created a new variation on a consignment model. So we don't take inventory at all for a retailer. We essentially borrow all the products from our vendors and we just pay them as we go. And, it just changed our cash cycle, right? Because now we're essentially always using negative working capital and borrowing capital. And, issuing more and more payments didn't really bother us because it was very seamless with the automated payables. And I think that is something, we're really trying to bring in. The philosophy similar with Invisible Commerce is essentially get away from inventory for commerce and focus on your value creation, which is that touch point of the customer.
Interesting. So that's a forward-looking thing, or are you doing that presently?
We're keeping it in mind. We do a little inventory with this new business, but we're already thinking about how can we push off inventory so we're not tying up as much capital in running a new type of commerce company.
Okay, great, cool. Okay, just a reminder to the audience, we've got a couple of questions left for the formal presentation. So we have 1 or 2 questions from the audience, and if you don't come up with more than that, you're going to have to listen to me talk about absolutely nothing for a few minutes. So And anyway, back over to George, just in the interest in closing our discussion. What can you tell us about e-commerce companies and what they should be thinking about in 2021 and beyond when it comes to best practices?
Yeah, interesting question. I think, we've spoken a lot today about best of breed systems and the integration and the automation of those systems. And that's incredibly important, and that's something to keep your focus on. But let's not forget the more traditional fears of a CFO, and that is with the extensive growth of e-commerce and e-commerce companies. Let's not lose sight of our working capital requirements. Jonathan touched on this earlier. Having to continually invest in people and product so that you can support your sales takes money, and generally takes money before you actually make the money. So keep an eye on that working capital, because that's going to be critical to success.
Okay. I think that is great advice. And Jonathan, you get the privilege of answering our final question. So with everybody looking at payables transformation, what advice would you give them, and what fears can you alleviate? And why should this even be a priority?
So I think one of the fun things on accounts payable is, because you are essentially paying people, or, there's always a concern when you're changing your processes that you have pushback either from your vendors or internal teams. The beauty with accounts payable, especially on the vendor side, is since you're paying them and they're trying to get paid, you can essentially make people jump through some extra hoops and kind of force them through processes that are more convenient for your business. And that's one of the nice things about automating accounts payable, that it's much easier to do than you would think, because vendors are happy to jump through any hoop if they can get paid faster or more conveniently or less with a headache. And then on the internal side, a huge benefit people don't realize is, every time you're using technology to replace or kind of alleviate how much staffing you need, that means you have, one, less staffing, but two, less overhead, right? Because managing people takes a lot of time. And in my experience, managing people is often the biggest headache of your business. So by default, less people means a much simpler and smoother running business, and you have less bureaucracy.
Yeah, that makes a lot of sense indeed. Well, I'm going to, before turning it over to our hosts, I'd like to do our second polling question. And again, I know if you can't see it, you can answer it, but I will read it anyway. How would you describe your finance department's current level of automation? And the options are fully automated, largely automated with no plans to upgrade, largely automated with plans to upgrade, partially automated with no plans to upgrade, partially automated with plans to upgrade, and then not made automated at all. Boy, I butchered that one, but at least it's written. So sorry for those of you who are only listening in wondering what the heck I'm talking about. But I'll give everybody 30 seconds or so to answer that, and then we'll chat about the results. Okay, I'll give you about 10 more seconds, I think. Okay, so let's see what our audience has to say. Partially upgraded with plans to upgrade, almost half. I'm a little surprised, but I think that's great that you're making the upgrades now. Actually, I guess as I think of it, I'm not totally surprised, because I know there's been some procrastination and teams are getting caught up. And then the second most popular answer, with about 22%, is partially automated with no plans to upgrade. So between those two, that's about 79% of the audience. So gentlemen, I believe you can stick around to answer any audience questions for a few more minutes. Mm-hmm. So I would like to turn it over to our host, Evan. And Evan, the floor is yours.
Thank you, Jack. And I just wanted to spend a couple of minutes talking a little bit about Tipalti and how we can help you future-proof your financial operations before turning it over for some of our audience Q&A, which I'm excited about. We got some great questions in there already. So just to give you a little bit of background on Tipalti, we've been around for about 10 years, and our mission is really to help businesses solve their global payables issues and help them get ready for scale and get ready for hyper growth and anything that's coming to help their business grow. And really, we want to ensure that we are one of the solutions that's going to help maintain that level of growth and without letting any bottlenecks get in your way. So as Jonathan alluded to, when your company is growing at a really, really fast clip and you have hundreds of suppliers that might be thousands of suppliers overnight, Tipalti is a great solution for you to take a look at to better manage those payments, better manage your suppliers, and really provide a best-in-class partner experience to that supplier community. Here I'm showing just some of the great customers we have across the board. We support industries from ad tech to manufacturing and retail to software and obviously e-commerce and many, many different industries in between. You see some of our great gaming clients on there as well, like Roblox, Twitch, and Blizzard, which has been very, very hot of an industry, especially during the pandemic. So just some of the major highlights here. One of the things that we really like to tell our customers is that we have a 98% customer retention rate. So that means once you start using Tipalti, it is very rare that you are going to move off of our platform. And that's because we really smoothed out the entire payables process for you. For many of our customers, we eliminate 80% or more of the manual payables process. And how we do that is really a holistic approach to automating and transforming payables. So we really start with supplier management and improving that experience. We then address tax compliance. No one likes to deal with tax forms, W-9s, W-8s, 1099s, PIN validation. There's a lot of complexity that goes with that. And Tipalti allows you to kind of forget all of those areas and allow us to handle it. One of my favorite stories about Tipalti I'll tell quickly. Tipalti is actually a Hebrew word, so like Tiki, it comes from a word in Hebrew that means we handled it. And so that's really our motto here at Tipalti is we will handle your global payables and you won't have to worry about it. And that's one of our favorite compliments that we get from our clients time and time again is that Tipalti is just handling payables, and we barely even notice it's there in the background. And that's I left off here on invoice processing. That's an area that we can help you automate completely, taking your paper invoices and using our OCR technology to scan those invoices into your system and make it a much more smooth and digitized process. We specialize in helping companies that are global, that have international operations, whether that's in APAC and the Asia region or EMEA in the European region. We help you really transact in any country or any region, supporting over 196 countries, 120 currencies, and 6 unique payment methods. And then we definitely can help you as you want to get more organized around your reconciliation and around your reporting. We provide a single source of truth for financial reporting and reconciliation that allows you to connect directly into your ERP, as Jonathan alluded to with NetSuite and Touch of Modern a little bit earlier. And it really supports a global life cycle and allows you to transform your payables process and reallocate the time that your employees might be spending on manual payables tasks to more strategic envelope pushing tasks for the actual business itself. So I will pause there and I want to jump into the Q&A. So Jack, if you want to jump into some of those questions from the audience, I think now would be a great time with about 5 minutes left.
Yeah, that sounds good. And you mentioned the 98% customer retention rate, which is fantastic, but I actually thought it was 100% because, as you know, a lot of my members are Tipalti customers and they all love it. They're never going to give it up. So thanks for making the CFO's lives a lot easier. So I would like to start. There is a question from Jennifer. I won't read the last names, but Jennifer wants to know, why did George's company switch from NetSuite to Intacct? Usually it's the other way around.
Okay, sensitive question, I'm guessing. It was two reasons. One was obviously cost. NetSuite have a habit of increasing the cost year over year, so our price of ownership was going up each year, which wasn't a favorable place for me to be. And the other reason was a change of methodology. NetSuite, although it does work with others, it does prefer to work with itself and offer one solution that covers everything, whereas the Intacct solution was a best-of-breed, purely financial package and allowed us through various APIs to connect with other best-of-breed packages, as I mentioned, in CRM, project management, and HR. So those are the two main reasons our company switched.
Okay, that makes a lot of sense. Cool. And then from Sim, who wants to know, what technology have you used to automate your systems? And he references OCR, which maybe one of you, I'm not sure what that is, to be honest, and AI and blockchain. He didn't direct it at anyone. So why doesn't Jonathan take the first crack at this?
Might not have the best perspective here. For the most part, we built everything in-house at my prior company and at my current one. We use few outside vendors, Tipalti being one of them. Tipalti does have their OCR capability on the invoicing side. And in terms of recommendation, AI algorithms, we do some of that internally, but we haven't found it to be as effective as you might think.
Okay, fair enough. George, anything to add to Jonathan's answer?
No, I mean, the API automation that I've used and seen, as Jonathan says, uses OCR as well as AI. So those are the two specifics.
Fair enough. Great. Okay. Back to Jennifer, and she's directing this one about Touch of Modern. And she asks, what kind of automation did you implement at Touch of Modern? She asked this early. We sort of may have covered it, but if you want to give the very brief recap.
So in terms at Touch of Modern, our automation was basically just integrating everything. How to say it? So at the end of the day, what we care about most on every order in e-commerce is all of our contribution margin, right? What is our net profit on every single order? And there's a lot of things that go into contribution margin, everything from the product revenue, the cost of goods, sales, tax, credit card processing, fees related to issuing payments, the labor with fulfillment, the shipping rates, the cost of packaging. And so we essentially kind of fed all that data into our internal ERP so that at more or less daily, we would know our contribution rate for all of our orders and essentially our contribution profit at the end of the day. And then once you have that, you can blend that in with your growth costs. In this case, we used paid advertising as our main growth driver. And we could make sure that essentially we're growing very profitably very quickly, right? And we could know our essentially return on ad spend and the profit rate of that as soon as possible, which helped our marketing team make faster decisions as they're optimizing campaigns.
Okay, interesting. Another question for George, and this may be the last question, but George, if you were to start or invest in another e-commerce company tomorrow, what would you be looking for?
Okay, good question. What would I be looking for? I mean, all the normal things kind of pop into my head, like, something that's going to make money, something that's easy to scale, and something that can quickly adapt to a variety, the changing scenery that we've seen over the past 12 months in terms of, the shift from working in an office to working at home. I think if I were to look for an e-commerce company, it would be or make an investment in an e-commerce company, it would be something that kind of can easily shift its business model around things like this happening again. Does that make sense?
It does make sense. So cool. And with that, we are at the top of the hour. Look at that. So, gentlemen, I want to thank you for your insights. I'm sure the audience thought that they were invaluable. So thank you for your time. I recognize that you're both really busy. I also want to thank Tipalti for the opportunity to get together and, share this expertise with their CFO community. So, Evan, do you have any final words, or should I just wrap it up?
No, we can just wrap it up, and we really appreciate you being on today, Jack. You led a great conversation, and I think that I got a lot out of it. I hope everyone else got a lot out of it as well. So thank you, everyone, for joining today.